Hi, this is Steve. Welcome to a special market update. A lot to cover today. We'll be going over first, quickly, the Forex markets. We'll be focusing on the euro dollar. For you option traders out there, we're going to be looking at Apple, some really interesting things about looking to maybe go in from the bear side on any continuing rallies. And then we'll be looking at the S&P, and then we'll look at how you can find out how I personally use candlesticks for my own retirement portfolio, how you can find out how to get more information about that so you could use the exact strategies I do. So let's focus first on the Forex market. As I mentioned before, look at the euro. We had a bearish engulfing pattern. That's a black candle wrapping around the white real body. Now notice these lines. These are Bollinger Bands. Many of you use them. Essentially, it's a way that I use it to gauge overbought and oversold. So the market gets to the top end of the Bollinger Band, I view it as overbought. And when it gets to the bottom end of the Bollinger Band, I view it as oversold. Now, the market poked its head above the top end of the Bollinger Band. And a lot of times when it does that, not always, but a lot of times when it does it, it comes to the bottom end of the Bollinger Band. So notice how the market got above the top end of the Bollinger Band over here. We'd be nervous with this doji. And the implication is a return to the bottom end of the Bollinger Band. That didn't happen over here. But what I'm looking at is because this 20-period moving average was broken this past week, sometimes this becomes a support area. My target is the bottom end of the Bollinger Band towards around 132. Now let's look at Apple. Apple's really interesting. So we've had a little short-term rally this week, a little bit of a base, but these two blue arrows are falling windows. Those are gaps down, and the gaps become resistance. And what I'm looking at is this whole gap is resistance. The major resistance is the top of the window, the falling window, so that would be up here where I'm pointing at with my arrow. But even if the market does get there, notice these red lines. It's a prior support area. Old support becomes new resistance. And the market got above it, but notice where it stalled. Right here at this falling window. So to me, these falling windows, the top of these falling windows represent a very strong resistance area. So that would essentially be from about the 505 area, maybe up to about the 520 area. And I would expect to see heavy supply coming into that level. And my downside target is a return to the lows that we made this month down at this piercing pattern. That's when a white candle gets into a black real body. And here, so kind of a support zone over here. So let's look at the S&P. We had a bearish engulfing pattern this week, the black wrapping around the white, and this blue line shows us that the market broke above it on Friday. So what should happen now is this old resistance area, right around 15.15, maybe to around 15.12 or so, should become support. That's the change of polarity. Notice how it worked back here in late December, early January. This resistance zone that I had with the two red arrows became a support level. So if the market is solid, it should hold this blue area. If it closes under it, then the risk, I don't think it's a big downside. To the risk down is to the lows that we had over the last week or two, and they were talking about the 1492 area. So let's look at potential upside targets now. Here we have a monthly chart going back quite a few years, and notice the highs that we made back in 2000 with this blue horizontal line over here coincides very closely to the highs we made in late 2007, around the 1550 area, 1570 in that level. So that's what my upside target is before critical resistance sets in. And notice the very nice bull channel that's been in place for the last few years. Now, from my experience, many traders and investors are using candlesticks incorrectly. There are a lot of what we call profit leakers out there. That is, ways that traders and investors, as I just mentioned, use them incorrectly, or because they don't understand how to use candlesticks correctly, they're missing some golden trading opportunities. And we call this profit leaker. And I have 10 profit leakers. And one of them is not using candlesticks for investing or for your retirement portfolio. I personally use it for my own retirement portfolio. So for example, here on this monthly chart, but I liquidated my stock portfolio back in 2008, right around the 1400 area. So I was able to save a 50% decline, and I got back into the market right around the 700 level down here. And I did this strictly based on candlesticks and Western indicators. And what I'd like to do is invite you to show you exactly how I did this by attending my live online event. It's going to be February 23rd, all day Saturday, and you'll have complete access, even if you can't make the session or only part of the session, to the recording for 1 full year. And in this this session, I'll be going over my other 9 profit leakers. I'll show you exactly what I did to exit and enter the S&P market, so you can do the same thing for your own retirement portfolio. I'll give you my best trading strategy as far as trade management is concerned, and I'll reveal my best candlestick signal. So go to this link. We are filling up. We do have very limited seating left on this webcast. So I look forward to seeing many of you in this virtual seminar. And thanks for being a member of the candlecharts.com family.